How's it going, traders? Hopefully you guys enjoy this weekly Forex forecast, and make sure to subscribe if you're new to the channel. All right, I hope everybody had a fantastic trading week, and let's start things off with the US dollar index. The past week, the banks added 44 long contracts, and they also added 720 short contracts. Now, the benefit of this Cot Report spreadsheet is that we can clearly see for many months now that the US dollar index, the banks have been majority long on their positions. And if you do want this Cot Report spreadsheet, links in the description down below to the Patreon. Now, I did mention something in the Discord group that I think the US dollar bull run will pause for a few months once we contact this 12-month monthly supply zone. And that supply zone is at about 112.5. So if you look at the weekly chart here, it's very clear. We have a strong weekly uptrend on the US dollar, but I do think we'll probably turn around at some point. I said that supply zone's at 112. It doesn't mean it's going to go exactly to 112 and then drop, but I do believe at some point, maybe at 111 or maybe a little bit sooner, we will see a significant down move in the US dollar index. Now, that does not mean I want to be trading against the US dollar right now. I am personally buying the US dollar, and I will show you the trade that I am in later in the pound, so definitely stay tuned for that. So as far as the US dollar index goes on the weekly chart, we have a very strong uptrend, and even the daily chart, we are technically sideways right now on the daily chart, but as you can see, we're coming up to this daily supply zone. I do expect this daily supply zone to break, and a lot of people ask me, why would I expect that? Well, it's just based on my multiple time frame analysis using multiple sequence analysis of the higher time frames are trending, therefore I think we will be moving up. So like I said, it doesn't mean I want to be shorting the US dollar. I still think we should be buying the US dollar pairs, trading long the US dollar, but just keep in mind, I think this bull run will come to an end very soon. And it doesn't mean that we're going to, pull back all the way down to below 100. But it definitely means that I think we could see a significant push down to lower prices. So as far as trading this goes this week, I would just continue to be buying the US dollar. It's looking very strong. If you want to be very conservative, which you could definitely be, I would maybe wait for this supply zone to be taken out on the daily chart first. But all indications to me are pointing to the upside. I still think there's a lot of juice left in the US dollar to the upside, and hopefully we can get all in a long trade on the US dollar index. All right, on to EURUSD forecast. The past week, the banks got rid of 862 long positions, and they also added about 7,300 short positions. Now, as far as the euro goes, obviously it's the complete opposite of the US dollar index, and we are contacting this daily demand right here, but we do have very strong weekly downtrends. Now, in last week's forecast on the 4-hour chart, I pointed out how I wouldn't really feel comfortable going in long, but if you did want to go in long, there was a little bit of a 4-hour zone right here you could look for confirmation in. But if that was removed, any supply zone here would have been a good trading setup. So if anybody listened to that and hopped down in that trade right there, very nice, and congratulations to you guys. As far as the euro goes, I think it's going to continue to go down. As far as any setups go, the only thing I'm really seeing here is this new 4-hour supply zone. So if price does come up to this 4-hour supply, you could definitely start to look for 15-minute confirmation in this whole general area right here. But if you get a new supply zone down here like that, that will be available to the members, and you will get that supply zone. That would be a decent supply zone as well. Now, as far as the membership goes, links are in the description down below. You can get my chart analysis on a daily basis. It's only $5 CAD per month, and a lot of people are using it, and a lot of people are making profitable trades with my zones or just using my zones for their analysis. So definitely check that out. Links in the description down below. Just remember, on the weekly chart here, we are contacting weekly demand as well, but everything I said about the US dollar index and the overall macro charts, I still think the euro will fall a little bit further, and then we'll probably see an up move. So I think for the euro for now, it definitely remains shorts only, in my opinion. Does not mean we won't see a reaction from this daily demand zone to the upside, but I think it will be short-lived if we do get that reaction to the upside. So as far as the euro goes, shorts all the way. All right, on to the gold forecast. The past week, the banks got rid of 4,700 long positions, and they also got rid of 3,023 short positions. And in last week's forecast, and I'm pretty sure a couple weeks before that, I pointed out this weekly area of supply. I said I would definitely not be buying the gold up there or until we get this supply zone on the weekly chart removed. So just wanted to point you guys that out, just to show you the power of supply and demand analysis. Now, as far as gold goes now and trading setups, it's a little bit difficult. We are reacting off of higher time frame supply, so technically we could be, looking for short positions. As far as the 4-hour chart goes, there is a 4-hour supply zone right here. It's extremely low quality. I just have the supply zone. It's pretty bad, but you could look for 15-minute confirmation coming off of that 4-hour supply zone like that. Other than that, I'm just really not seeing anything here on gold. We do have a 1-hour downtrend, so you could technically be day trading, a 1-minute chart or a 5-minute chart to the downside. I think that's completely fine, especially since we're reacting off higher time frame supply. But like I said, I just don't really see any setups right now. Gold is looking very weak to me, but if we look at the macro chart timeframes, like the 12-month, 6-month, 3-month chart, it's very clear to me that gold is in a long-term, I mean very, very long-term, a yearly, decade-long bull run. So I do expect gold to continue to push up in the long term. So I'm not really going to go over any day trading setups here in gold, but as far as the long-term trend goes, it's just very clearly up. So I think that we're just seeing aka minor pullback. Yes, we technically are ranging right now in gold, but I do expect it to go up long term. That does not mean I will just be buying all of a sudden. I'm either waiting for gold to pull back to 1600 to start acquiring more physical and start to look for longs, or if we can get this weekly supply zone taken out, that would be a fantastic indication to me that price will continue to move up in that long-term bull market on gold. But until then, I will not be buying gold just because it looks so weak. So as far as day trading goes, it's got to be to the short side only. As far as long-term goes, shorts are probably not the best thing to be doing, but they're definitely possible. But I do think, like I said, gold will be going up long-term. We're just going to have to be a little bit patient for those swing trade long positions here on gold. All right, on to the USD Japanese yen. The past week, the banks added 2,834 long contracts, and they also got rid of 1,025 short contracts. I did mention in the public Discord group that we are reacting off of this daily supply. So if you want updates like this and reminders, definitely join the free Discord group. Links in the description down below, trying to get as many members as possible. So now we are reacting off of this daily supply zone. I've been talking about this supply zone for a few weeks now, and I basically said we should be shaping our trade around that daily supply zone. And why? Well, because we have a very strong weekly uptrend, and I do think that there is more juice left in the US dollar bull run. I want to be trading with the trend. But the problem with just buying right now is the fact that we lost we had a significant momentum shift. We had a strong uptrend, and this supply zone broke that momentum to the upside. So now this zone is very relevant. So basically what I'm waiting for is for this supply zone to be taken out, and that is a great indication that price will be continuing to go up following that weekly uptrend. But also it's very possible we see a move down from the supply zone, although we are testing it very deep now. We almost broke it here. So in my opinion, all indications are pointing that this is going to break. So I don't really recommend shorting USD yen right now. It's very possible we see a small move and then a bigger up move. But what would you rather have? The up move trading with the weekly uptrend, or would you rather have the counter trend move making smaller profits and likely getting stopped out? So that's kind of the way I look at things and the way I trade. So as far as USD yen goes, I would just wait for this daily supply to be broken, proving to us that the trend will continue, and then we can start to hop on long. Now, that's the more conservative entry. If you want to predict that price will be going up, which I think is fine, we do have a very clean 4-hour uptrend and a 1-hour uptrend. Yes, there are some supply zones here, but I do expect these to break. But you could be day trading to the long side with this 4-hour and 1-hour uptrend. But remember, if you're going to be doing that, it has to be day trading timeframes. You shouldn't be just entering on a 1-hour chart right now because you don't even have a daily uptrend and this daily supply has not been removed. So any longs, day trading must be on the lower time frames, on the 1-minute, 5-minute, or even a 15-minute chart. And the same thing goes for shorts because of the weekly trend. So as far as any trading goes right now, it's probably only day trading as far as the USD yen goes. And like I said, long is definitely higher odds than short, although we could see a small move to the downside. I would feel much more comfortable getting in long with this overall weekly uptrend. All right, on to the GBPUSD forecast. The past week, the banks added 1,865 long contracts, and they also added 506 short contracts. Now, I did enter short on this pair. I will explain to you my reasoning for it and everything. So we have a weekly downtrend. The daily was sideways up here, but it's very clear to me that we are breaking that sideways price action. So the reason I entered in the reason I entered in short is to trade with that weekly downtrend. So what I did is I came over to a 4-hour chart like this, and obviously we had, you know, that 4-hour uptrend right here, and then we ended up breaking the uptrend, and then we had a supply zone right here. That supply zone broke, leaving us with demand, and then that demand broke, and it was clear to me that price was probably going to be going down. And also I looked at the retail sentiment, and I noticed that the majority of the traders, retail traders, were long the pound, trading against the weekly trend. So I don't remember exactly where I entered. I still am involved, and I did take half my position off. I entered right around this area when this 4-hour demand was broken. So I entered right here, and my stop loss was above here. I understand that that's a very large risk to reward ratio, as far as, you know, I basically only got like a 1-to-1, but the idea of it is that I'm using supply zones as my stop loss, and I'm just entering here to get involved in the trade. If price would have pulled back up to this supply zone, I would have entered again with my stop loss in the same position and doubled my position, and obviously I would have made more money. So just wanted to break down that trade in the pound for you guys, and I am still involved, and my target, my final target, is actually just right at this low right here. So if price even breaks down lower, which I think it will, that's fine. I would just happily take out my profits right there at that daily low. So basically that trade was using supply and demand zones, but not waiting for the pullback and just hopping along, trading against retail traders. And that's a very, very powerful strategy. That's something I do a lot now. So as far as more positions go on the British pound, what I could actually do with my stop loss is at break even right around there, but I could technically bump it down to here above this supply zone, and you could actually look for 15-minute or 5-minute confirmation coming off of that 4-hour supply zone. I think this is a very high odds situation right here. So as far as the pound goes for trading setups, the only thing I'm really seeing right here is this 4-hour supply zone where you could look for confirmation to the downside on a 5-minute or 15-minute chart. And if you don't know what confirmation is, check out my trading tips playlist. Link is in the description. I have a few confirmation trading videos where you can learn exactly what I look for as far as trading setups go. So as far as the pound goes, day trading to the short side is completely fine. Even swing trades to the downside are fine trading with the weekly downtrend, but the time to do that probably would have been up here where I did it. To just hop in down low here, right at the low, I think it's very possible we see a move up and then a move down. So you could be stopped out. That's why I entered sooner rather than later. So as far as the pound goes, that 4-hour supply zone is really the only option I see right now. And I don't want to be going in long, because long traders are retail traders right now, and we all know that, you know, we don't really make that much money, the majority of retail traders, and you're trading against the weekly downtrend. So in my opinion, it's shorts 100%. USDCAD forecast. The past week, the banks they got rid of 699 long positions, and they also added 4,945 short positions. Now, I'm going to be very clear, and I'm going to basically say exactly how I feel on this pair. I don't like it. Last week, I was wrong in my prediction to trade short, and that's fine. But I also said you'd be trading against the weekly uptrend, so it's very, very low odds trading. So as far as the USDCAD goes right now, I don't like it. And why? Well, we have a weekly uptrend, the daily sideways, and now the 4-hour sideways. So there's just no indication of where this is going. If I had to guess, it would be up based on the weekly uptrend. But as far as trading setups go, I just don't see anything, and I don't recommend trading this pair. There's, 50 other pairs you could be trading, and this is probably not going to be one of them that's going to produce high probability trading setups, and that is what I try to do all the time. I try to find the highest probability setups and go with those. So, I don't even know what to say here. If anything, we have a weekly uptrend, so longs are technically the best thing to be doing, but I just don't really see any setups. It's a very poor quality 4-hour zone, poor quality 4-hour demand zone down here. It's not terrible, but when price pulls back to here, the whole thing could change. So as far as USDCAD goes, we're basically going to skip it this week, and hopefully you guys can understand and appreciate my honesty when it comes to this. There's just many better trading opportunities in other instruments. All right, on to Aussie US dollar. The past week, the banks added 3,191 long positions, and they also added 4,851 short positions. This chart is looking very similar to the pound. I highly recommend you go look at the British pound and compare to the Aussie dollar. Everything is almost the same as far as, the weekly chart. goes and the 4-hour chart and even the daily chart quite a bit. So I do personally believe we will be continuing this down move on the Aussie dollar. And why? Well, because we have a weekly downtrend. Yes, the daily is sideways as well, but I do expect to break lower. So as far as a trading setup goes here on the Aussie dollar, the only thing I really see is this 4-hour area of supply. So I don't really recommend just hopping in short with a stop loss and taking profit down there. What I would recommend is to look for a confirmation setup day trade to the downside if we get that pullback up to that 4-hour area of supply. As far as longs go, I don't recommend getting in long. But although it is very possible that we do see a move up from this daily demand zone, but I do expect that to be short-lived and that we will probably roll over to the downside. So as far as longs go, you technically could look for day trades in this area at about 0.68545. But like I said, I think it will be very short-lived and we will eventually see it roll over to the downside. I think that a lot of the other Aussie dollar pairs like Aussie yen, pound Aussie and stuff, they're actually offering more better setups with trends compared to just the Aussie US dollar. And we do go over all of those other pairs and cross pairs and anything you guys want in the level 2 tier 2 membership on YouTube or Patreon. So definitely check that out. It's worth every penny in my opinion. You get a lot of stuff in the membership. So as far as the Aussie dollar goes, all I see is this 4-hour supply zone where you could look for a day trade. Other than that, we already kind of missed a few 1-hour supply zones throughout the week. So that's all I see right now in the Aussie dollar, but overall it is looking very weak. We have to look at the higher time frames to indicate which direction it will be going long term, and it does not mean that we won't see counter trend moves, but it's always better to be trading with that overall trend, and that overall trend is down. All right, USDCHF. The past week, the banks got rid of 5,500 long positions, and they also got rid of 862 short positions. Now, if you did watch my last week's forecast, I talked about how, yes, we have a weekly uptrend on the top left screen. We also have a daily downtrend. So shorts on the lower time frame, day trading time frames, were completely fine. And obviously, price pushed up, and that didn't end up working out. So sometimes, we are always wrong, or not always wrong, but sometimes we are wrong, and there's nothing wrong with that. But I did notice something here on the USD Swiss that I found very, very interesting. Yes, we have a daily downtrend, so buying right now is a little high risk, but it's a very confusing time where we have a weekly uptrend and a daily downtrend, but I want to be trading with the weekly uptrend as far as swing positions go. And I did notice something here on the 4-hour chart. We had a very, very strong 4-hour downtrend, and the 4-hour downtrend just recently broke this past week, leaving us with 4-hour demand down here. So as far as trading setups go, if you want to continue to trade with that weekly uptrend, what I could suggest is to wait for, so I would set an alert right here and look for a confirmation day trade to the upside. And who knows, we could see a huge rally from that demand zone based on the weekly trend. So I think that this 4-hour demand zone is looking very decent as far as getting in long and trying to trade with that weekly uptrend. And the profit margin is just insane. If you look at the daily chart here, we clearly have a lot of profit margin up to the nearest daily supply. As far as a more conservative entry goes, the most conservative entry would be to wait for that to happen, removing this downward trend line, and then trading that daily demand zone to the upside. But I don't think there's anything wrong with hopping on early and predicting the trend reversal here based on the weekly trend, but we can only really predict the break of this trend by looking at the higher time frames, and all the higher time frames are all trending up. So that's why I think it's fine to hop on sooner than later and predict the end of that trend. And as far as shorts go, if you're looking to day trade short this daily downtrend, I wouldn't recommend doing it until we can get this demand zone removed. So right now, whether you're going in long or short, I think it's all got to be revolved around this area. So let's say you look for confirmation long in here, you don't get it, and price breaks down below. If we're left with a 4-hour supply zone right here, that would be a decent little area to look for a day trade to the downside in. But until that happens, I would not be getting in short just yet. Even though, yes, we do have that daily downtrend, remember, the weekly trend is up and it is strong. So whether you're trading long or short, revolve your trades around this 4-hour area of demand. I think it's fine to look for longs in here, and it's higher odds than looking for shorts right now based on that weekly uptrend. So hopefully that makes sense on the USD Swiss. I know this can be very confusing, so please, if you have any questions at all, please just let me know in the comments down below, and I'll be getting back to every single one of them. All right, finally we are on oil. The past week the banks added 8,600 longs and they also added 4,400 short positions. Now this is a very, very interesting chart. I am very interested in oil right now and I'm excited to see what takes place. So if you look at this screen right up here, you can clearly see we are reacting off of one of my demand zones. It's only a small reaction right now. I'm not trying to be like, oh wow, what a move from my demand zone. But clearly we are reacting off of it right now. And the problem with getting in long right now is that we have a significant daily downward momentum right now. And if you remember in the last couple weeks forecast, if you've been watching, and if not, I highly recommend going back and looking at the accuracy. I said we were probably going to pull back down to here, up and then down. And that pretty much happened exactly as I predicted. Now, I did also mention that we could be looking for longs in this whole general area right here, and I still agree with that 100%. I'm not seeing any evidence that price is going to push up just yet, but to be very clear, I would not be shorting oil right now at all. Technically, on lower time frames like the 1 minute and 5 minute, that's fine because we do have a 4-hour downtrend, but I just don't recommend it. And there's a few options for getting in long right now since we reacted off weekly demand. One option, which is the most aggressive option, is by removing this downward pressure on the 4-hour chart. We have a very clear downward trend line and supply zones being respected. So as you can see, we reacted off the supply zone right here as well. So the aggressive entry would be something like this. If we can get this 4-hour downward trend line removed and this supply zone, that would be your confirmation to the long side like that. This is aggressive. I cannot say that enough. It's aggressive, and there's nothing wrong with aggressive. You're just trying to be hopping on early on oil. Now what I'm going to be doing is two things. I'm either going to wait for oil to push lower. I think it's around $80 a barrel. I wish I could switch charts right now. 1 month. Okay, here we go. So if I do this, you can clearly see that there is a demand zone down here on oil. That's at about $80 a barrel. So if price pushes down to $80 a barrel, I will start to probably acquire long positions on a oil ETF that I do like a lot as far as long-term positions go. That's one option that I'm waiting for. The other option is something like this, and this is the more conservative option as far as trading this one goes. I would wait for this daily supply to be taken out, and that would be a great indication that price is going to be pushing back up. Now, why this supply zone? Why not this one? Well, obviously, the more removed, the better. But we obviously want to hop in on trades. We don't want to wait forever to get in on a trade. So since this supply has worked out perfectly, like I said, and it's proven its significance by pushing down, and I do think the banks are selling here. If the banks remove this supply zone like that, that would be a fantastic indication that price is going to be pushing back up. So if we can get this daily supply removed, then I'll be hopping in long on oil, maybe on a 1-hour chart or a 4-hour chart. But until then, I'm just going to either wait for $80 to be hit or wait for this daily supply zone to be removed. So hopefully that makes sense on oil. I like to always take the more conservative entry instead of the more aggressive entry, and it seems to be working out well for me. So hopefully all that makes sense. Any questions, just leave in the comments down below. Hopefully you guys found this weekly Forex forecast helpful. If you did, make sure to let me know in the comments down below. Leave a like and check out the Patreon or YouTube membership if you need help finding your supply and demand zones. It's only $5 CAD per month. Hope to see you guys there and hope to see you in the next video.